right, let's get started, guys. Good morning. Thank you all for coming in. We have some very special guests for you today. I want to ask you guys, please participate. Please ask questions. We've been having a lot of you guys asking, how can we make our offers compete? How can we make them stand out? How are we going to compete with these cash offers? How can my clients who don't have cash compete in this appraisal waiver world that we're in now? So we want to present to you all the tools that we possibly can. And Jason Pughe from Amerifirst and Michelle Renner from Ameriuno are here, and they're going to be answering questions and giving you guys, telling you about some of the products that they have. And I'd like to go ahead and introduce whoever would like to start with you guys, and go ahead and introduce you guys. So Jason, Michelle, please. You're both on mute, so there you go.
I was going to defer to Michelle, so ladies first.
Oh, thank you. Hi, everybody. We're excited to be back on this talk. Sorry, there's messages coming in. Yes, so Jason, you can start with the whole, the offer boost for the realtors, because I think it's very important right now in the market that we're in.
Yeah, so the reason why you're probably here is because, like Ryan said, just you're losing out to cash offers. Different things like waiving appraisal, waiving finance contingency, things going over what the listing price is, just a variety of things. So we have two products that we've partnered with two companies. One is a program that's really for right now for coming in as a cash offer and being backed by cash. So we would still do the financing portion of it. But you can waive the finance contingency and the appraisal contingency. If financing were to fall through, this company would come in and still purchase the property. The other program that we have is more of a not ready right now program, to where this company will come in, purchase the property, and that's more for people that maybe don't have quite the job requirements. Maybe they started a new job and we need 30 days of pay stubs. Maybe we need a 2-year history. They're just under that. Maybe don't have the amount of funds for cash to close, but they will a year from now. So that's another program. And then I know, Ryan, you and I talked, so I mean, I can go a little bit more into detail with these programs, but I know you mentioned some specific questions. So I don't know which way you want to go first.
Well, I think the biggest thing is our agents have been actually requesting this meeting so we could talk about how can I make my offer stand out. I'm going against multiple offers. How can I make it stand out? How can I make it compete? I have people putting 20% down and they can't get a sniff because there's cash offers, or there's people putting 30% down, or there's always something better. So what can I do to compete? Yeah.
So aside from these programs, one thing that we can do just from a traditional financing perspective, because we have an appraisal management company, we are able to rush appraisals. So I've had a lot of clients that will do maybe a 5-7 day inspection and waive the appraisal contingency, and we're able to get a rush on that appraisal and get it back in time to where we can see what that value comes in at, especially if they're going over the listing price. And if it's a big gap and the client's not comfortable paying that gap, they can get their deposit back because it's still within that inspection period. So that's always on the table. That's always something that we can do. Like I said, we have our own appraisal management company, so doing rush appraisals is not a problem. Now, when we go to these programs, so one of our offer boost program is with Ribbon, and we've partnered with them and have some unique offerings with Ribbon that other lenders wouldn't have, because we're able to kind of absorb the cost of the Ribbon fee. So basically, if you're not familiar with Ribbon comes in as a cash offer. You can waive appraisal contingency, waive finance contingency. They still want you to have an inspection, just for the perspective that if financing does fall through and they have to buy that house, they're gonna want an inspection done, and they might have some things that need to be done from an inspection standpoint. However, if we're doing finance and closing that deal before it closes with financing, you don't need to get the inspection items done unless it's going to show up on an appraisal. So this goes for conventional, this goes for VA, goes for FHA, USDA. But just keep in mind, even with this program, if you have an issue with, that's going to come up on a VA appraisal, or an issue that comes up on an FHA appraisal, that issue is still going to be there because we're financing it. Just Ribbon's coming in, offering cash, doing the incentive of making it to where it's backed by cash should financing fall through. The listing agent and the seller know that the property is still going to be bought and still close. The other cool thing about Ribbon is they will give a value on the actual property. It takes them 24 hours to do a valuation. So you kind of want to do this when you're looking at properties. They will give a value on the property. I have 2 right now with offers in that are listed at like 360. Ribbon gave them a value of 380. So let's say that your client offers 380,000 for this because Ribbon gave it that value. Appraisal comes in at 360. Ribbon will actually give $20,000. They'll give that appraisal gap to the seller at closing and cover that appraisal gap. And we will finance it to 360 based on our appraisal, but they will cover the appraisal gap. Now, if it comes in at 385, they're only going to come up to 380. And then your client would have to come up with a $5,000 difference if they want to do that. So that's one of the great things about Ribbon with the appraisal gaps. Like I said, we're still financing it. Really, since I've been in LO, if it's going to underwriting, it's going to close. So, that's the whole goal is to close it from a finance perspective because it's less of a fee. So Ribbon charges a 1% fee to basically use their services. So $400,000 home, $4,000. So your client can either pay that $4,000 for those services at closing, or we will absorb some of it with the rate, and you can build some of that cost into the rate to where it's not going to be a $4,000, or the 1% fee or whatever it is. Now, in the event that it doesn't close with financing, Ribbon charges a 2.75% fee, and then they will negotiate a lease with the buyer, and that lease is typically up to 120 days. If it's FHA, because it's got to be 180 days, they can extend it to that. And like I said, there's a 2.75% fee in that case, but they will purchase the property, and then that's basically their contingency and why you're waiving the finance contingency. The other program is through a company called Landis. Same thing. They come in as cash, they purchase the property, but they are going to actually close on the property. And what they do is they purchase it for that buyer. They negotiate a lease after that up to 2 years. Keep in mind, if it's FHA, if they're going to have to finance FHA because of FHA guidelines, there is a identity of interest is what it's called. And for 181 days, they have to rent that property. So how Landis makes money is they don't make it off the rent. It's not like Home Partners where they're hiking the rent up. They're charging market value on the rent. And basically, when those people purchase the property, the buyers, within that first year, it's a 3% fee. So if they purchase a house for 300, they're going to sell that house for 309 to the buyer when they're ready to finance from that lease. If it drags in past the first year, it goes up 0.25% each quarter. So the max is 2 years, 6%. So if they purchase it at 300,000 and they got to rent the whole 2 years, then they're going to purchase it for 318 2 years later. So it's nice from the perspective that they're locked in, and obviously, as you know, with the appreciation in this market, 3%, even 6%. I mean, the property is going to be worth way more than that, and this gets them locked in on the property and essentially at a 3% or 6% fee, depending on how long that they rent.
Wow, that's a lot of information.
Yeah.
So that's fantastic. I appreciate it. Let's talk about, let me just ask you a question and you just kind of answer it as succinctly as possible, because you just gave us a ton of information. So what is going to allow me to go into a multiple offer situation with a cash offer on what's really a finance client? you mentioned at the beginning. Give me that first paragraph or so again, where I can present an offer without a contingency, without a financing contingency.
Yeah, so you're waiving an appraisal contingency, you're waiving a finance contingency. Like I said, you're still going to have to do an inspection. You don't necessarily have to get those items done on the inspection if we're going to be financing it, but you're still going to have to get an inspection, so you can't waive that contingency. But you're coming in waiving finance, because if finance falls through, this company is going to come in and purchase the home. And then you're waiving the appraisal contingency, because you've got that appraisal gap coverage that they offer as well.
Okay, Jason, what I'd like these people to do is, if they have this situation, I'd like them to contact you. If you put all your contact information in there, I just want to remember to ask you guys that, both you and Michelle, so they can contact you guys before they go making some offer that they're not 100% sure how to word it. They do definitely need an inspection period.
They do need an inspection period. There's also a portal for this that we would get them and their clients set up on. So you're actually making the offer through this portal. Then Ribbon gives an addendum, and that addendum is going to show that it's, what Ribbon's about, cash offer. I also reach out to the listing agents and let them know that this is a cash offer. However, we are financing it. And here's the pros of us financing with our fast appraisal process, with our fast close process, and just our reputation. So so there is a portal that, in a perfect world, what you want to do is, when you know that your clients are looking at a place, at a property, you want to put that property in the portal, and within 24 hours it gives that valuation where Ribbon is giving it that value, so you can see how high you can go up to that value and waive appraisal or cover an appraisal gap. So that portal will solve a lot of this. You're still using your standard contract. You're having that ribbon addendum that's going with it.
So you're pre-approving the buyer for a certain amount, right?
Correct.
So then the house that they look for has to be within that range.
That's correct. So Ribbon has a certain amount, whereas if it's under 500,000, we don't necessarily need all of their documents to pre-approve them. We can just do credit and automated underwriting. If it's over 500,000, they've asked that we verify the assets, we verify the income, and basically attach our pre-approval letter once we set that buyer up in the portal.
So is that buyer still getting pretty much pre-approved like they really would be if they're financing? I mean, I guess they are financing.
Yeah, correct.
So they're not going to be approved for really anything more than they can really afford.
Correct.
Yeah. Okay.
Now, the other side with the clients that aren't ready for the Landis program, I mean, they'll go down all the way to a 550 credit score with that. So that one necessarily isn't where, if we can't approve them, Landis will approve them. And then we would try to see what the scenario is with that and how long it's going to take, and let them know, okay, well, you need to get to this to be financed from a mortgage perspective. But Landis has a different underwriting criteria. It's a little more loose than standard guidelines. But like I said, that's more for the 6 months to two years, people out type of program.
So if you were going to use a Landis program, that's sort of a rental.
Yes.
Do we go through you, or do we just do the Landis on our own?
So we have a portal that we set up the buyer with Landis, and we put them in there. They supply the docs to us. We give those documents to Landis, and then when Landis approves them, that's when they will work with the agent, and then that way, you can get that offer out with Landis and essentially close on it, get paid on it, and then we deal with the financing portion after that with however long it takes to get them financed.
But Jason, I have a question. So should I just go in there willy-nilly and create a profile in the portal, start something in the portal, or should I wait till I have a buyer?
Wait till you have a buyer. Then we will set them up in the portal and also do the agent the real estate or realtor invite as well, to where you can get set up in the portal.
Right, and it'll link everything to you as well. Mm-hmm.
Fantastic. I know we have more questions. We have some in the chat. Couple of things in the chat are, so you can do an appraisal within 7 days of inspection period, including the written report.
Correct.
Okay. Is Ribbon available for modular or mobile homes?
It is not. It's also primary residence only.
Okay.
The other thing too with the inspection period, keep in mind, we can do 5 days. I'd prefer not to get a contract like Thursday night and then the inspection period ends Monday. I mean, if we have to do that, it is what it is, but just know that you're dwindling down your list of appraisers that can maybe take that order, giving it only basically 2 business days to get it done.
Okay. What do I do, Jason? Do you have investor loans outside of this? You do.
Not that are cash offered, no.
No, but outside of this, you have regular investor loans.
Yeah.
Okay.
We've brokered products. Michelle's probably more familiar with that than I am. She works a lot with our brokered loans. I tend to be more of an in-house guy because I like having control over the process.
Okay. So how do I help a client in this environment that doesn't have a lot of cash? Maybe they're VA, maybe they're just kind of an FHA kind of person, really wants to buy a house, needs a house, but they don't have a lot of cash.
I mean, at the end of the day, they're going to need cash to close. So I would say Ribbon, if they're not having the cash to close, is probably not the ideal program for them. I would say more it's the Landis one. The problem is Landis is going to take the one that the Landis program that's not a right now program, but it's a future program when they're ready. They're going to get them on a path. So they're going to have coaching. It's a 2% buy-in that they put in. So if they're buying a $300,000 house, they got to have $6,000 that they're putting in. And then that $6,000 is going to be used towards their closing costs and towards the cash to close. They're going to give it back to them. But if they don't have the full, let's say FHA, you've got 3.5, and then give or take your prepaids and closing costs are probably another 2.5. So you're looking 6% all in. If they don't have that full 6% and they only have 2%, then Landis is going to make the rent a little bit higher to make up the difference of that extra 4%. So the rent payment might be a little higher, but it's all going to go to them for their cash to close when they're ready. So I say that where, if somebody is having a hard time saving money and they don't have it, unfortunately, this is going to be fortunately, it's going to be a disciplined method for them to save. But unfortunately, as a lot of clients that are on that path, it's if they haven't been saving all this time and all of a sudden you need them to save for the next 2 years, it might be a challenging thing for them to do, but it's really the only option. They're either going to be renting and not have a chance to buy a house, or they can rent and have a chance to buy a house at what the market price is right now versus, whenever they are ready to buy.
Jason, we have part of the curse of being a realtor is that people want to help you by sending everybody who wants to rent something. Hey, I know somebody wants to rent something that, here, let me help out your business. So would you recommend that we take every renter that we have and try to maybe do something like this?
I mean, I would prefer that you prospect them a little bit and see if they have money, because your time's valuable, my time's valuable, Michelle's time's valuable. We definitely want to find a path to try to help them, but at the end of the day, if they don't have money to purchase and they really don't have money to purchase, on a plan 2 years later, then we can't help them and you can't help them. So, the Landis program would be ideal for somebody that I feel has the funds or will have the funds, within 2 years. And those type of people we can help. I have a guy right now who is trying to go through Landis and, he's like, I don't have any money, so I want to do down payment assistance. I want to do all these things. And it's like, well, we can't do anything at that point. You got to have some skin in the game.
All right, fantastic. And what if my clients they speak Spanish? They're not so much like me right now, not that great with English. So what do I do with my Spanish speaking clients?
Michelle can help them. She is fluent in speaking Spanish. I am not. So she'd be a perfect person for them to talk to.
Absolutely. Happy to help. And we understand the culture and everything. So yeah.
So is there like a resource center for them, or are they just?
We have a home opportunity center right now in Kissimmee. We have our grand opening May 5th, if you guys would like to join as well. I'll send that information in the link too. It's in the Loop in Kissimmee. But yeah, we're here to educate and see that a lot of people have no idea they can really purchase or, you know, repair the credit and everything. So we're here for that.
Fantastic. Daryl is one of our agents. He's really shy. So how is proof of funds handled?
So Ribbon will actually give the proof of funds. They handle that with the proof of funds. They're backed. The number escapes me, but I think like $200 million of, you know, backed funds, and they provide the proof of funds.
Okay. Fantastic.
And the other thing too to point out is since it's primary residence only, which I like to tell the listing agent, this isn't an investor company that's coming in to purchase a house. This is basically them being a cash offer as an insurance policy, but it's still going to, you know, two homeowners or one homeowner. I'm a primary residence, just somebody that has to do this for this market, and they're the ones getting the home. So it's not an investment company coming in and gobbling it up, trying to make a profit, and then, you know, turning around and selling it.
Do you do this in California? I have people moving to California. Would you handle something like that?
Yeah, I mean, we have offices in California. I'll see their area if Ribbon's there. I would imagine they are. Michelle might know better than I do. The other thing is, for Central Florida, as of right now, they don't handle Volusia or Polk County, just as a heads up. But maybe in the near future they will. But we can find out about the California piece. I would imagine they do, just because we do have, you know, a number of branches in California.
Okay, and Jason, we have Tampa, Sarasota, Jacksonville. All of those are included.
Yes, and I'll send a map of what's covered. I do know for sure Polk County and Volusia are not on the list yet.
Okay, guys, and I want everybody to remember, Jason, Michelle, they also handle just regular loans and stuff too, but this isn't all they do. But I just wanted them to present some of this, some of these programs that will help you guys in this particular market. These programs probably won't be around in 3 or 4 years because the market might be different, right? So we'll be having some other kind of program where they help sellers do something, you know, so whoever needs help to try to stand out from the competition. So I know some of you guys are going to have questions because I don't completely understand everything they just did. And you guys, I'm sure somebody has questions about something.
Hey, Ryan, one more thing too. So the other scenario that Ribbon's great for is, let's say, for instance, that you have a client that's looking to sell a home, but they don't want to sell their home because they're concerned about buying another home and then selling it in time and doing that. So Ribbon can work as a bridge loan as well, to where they can actually purchase that property of the home they're selling. They will charge a 2.75% fee. So if you look at it from that perspective, you could still be the listing agent, get your 3%. Ribbon's coming in as the 2.75%, and they will actually purchase that property. And then so you don't have to have a home sale contingency either. And then they'll negotiate a lease off of that for up to 120 days, just so you don't have to have that sale contingency when they're buying the other house.
All right, run that by me again real quick. So I have, in this scenario, I have a buyer who is never going to win because they've got a home sale contingency on the offer they're going to make. Okay, what if I have a seller? Can I do anything with that? Because I'm having a hard time. If I'm a realtor right now out there practicing, I'm having a hard time convincing people to sell because they don't think they can buy. I need listings, right? If I'm going to survive in this world, because this is tough. The reason we're having this meeting is it's tough out there for buyers agents. So I need listings. But one of the greatest pushbacks right now that I'm hearing from you guys is they don't want to sell because they don't know where they're going to go.
Right.
So is there a way that this bridge loan type program could help them buy something before they even sell?
Yes. So basically the answer to that would be, you would have Ribbon come in and buy the house, not close it by financing. So they could buy the house, and then when you turn around and buy the house from Ribbon, it's just going to be at a 2.75% fee versus a 1% fee.
Okay.
So they would buy it as cash. It would close with Ribbon, and then you would basically purchase the property from Ribbon at a 2.75% fee.
Okay.
And you're leasing it in the meantime till your house sells? Is that what you're
Correct.
saying? Yeah,
Yeah.
from Ribbon. Okay.
There's something to think about, guys. I mean, hopefully that's getting you 3 to 3.5% on one side or the other of that, or on both sides of that. And if you have to help them out with a fee here or there, then maybe you can do that. Just an idea.
So if you're going to present this to a buyer, I have a buyer that has a lot of cash down, but we still can't compete. So, and I want to tell him about this program. Does he go online, and what's the process once you have a prospect?
Yeah, so I can send you some marketing material that touches on the highlights. Really what I would recommend is looking at that. If they're interested in moving forward, then we can pre-approve them and then get them set up on the portal that way. But I can definitely send you over some flyers and what are the ineligible properties, how it works, things like that. I will tell you that I do know in the near future, it should be sometime next month, they're going to change their appraisal gap guidelines. They're still going to cover the appraisal gap, but it's going to be a different process of how they do that. I can, when that's in place, we can talk about that. But for right now, all the literature that you'll receive will explain the appraisal gap process and things like that. So if your clients wants to take advantage of that, then we can get them pre-approved. We can get them set up on the portal. But I can get you the initial documents that should touch on what the program's all about.
Jason, can you hear me?
Yes.
All right. Can you run us back through the appraisal gap process that you talked about, where the purchase price ended up being $385? They had desktoped it at $380, and the actual appraisal came in at $360. I'm confused about what happens with the $5,000 and the $20,000.
So basically, if you're financing, we're going to finance it at that $360. So
Okay.
Their loan amount, if it's 5% down, is going to be based off the 5% of that $360. If it's 20% down, it's 20% of that $360. So you've got a $25,000 gap there.
Correct.
Since Ribbon has given it up to $380, which would be $20,000, they will credit $20,000 to the seller at closing. So that seller will still get the $20,000 gap. Now there's an extra $5,000 because Ribbon didn't value that property at $385. Then the buyer has to be on the hook for that $5,000. So they're still going to have to make up the appraisal gap of $5,000 in that scenario, and then Ribbon's making up the $20,000 because they valued it at $380 as opposed to $385.
So you're financing $360. And the $5,000 comes in at closing. What happens to the $20,000? Is that get it as a silent second, or is it how does Ribbon handle that?
They just do a basically a credit to the seller at closing. So they are sending those funds to the seller at closing.
Okay, I get that. They're covering it, but how they don't just give $20,000 away? Is that what you're saying?
That's what I'm saying.
They do give the $20,000 away.
Yes.
Wow. Okay.
Yeah. So that's why they're changing their appraisal process next month, because I feel like they figured this out now. Just the brief highlights of what I know they're going to be doing. They're still going to do the same process to where they're going to have a max Ribbon value, but they're going to handle it two different ways. One way is there for every $1,000 of the appraisal gap, the buyer has to come up with $250. So if you look at a $20,000 appraisal gap, they're going to have to come up with $5,000, the buyer. The other way that they're going to handle it is, like you mentioned, with like a silent second, they can defer that $20,000. And when the, typical to like, similar to like, down payment assistance or solar. So when you sell or do a cash out refi on the house later down the line, then that $20,000 deferment is going to have to be paid. So that's the two methods that they're talking about next month of how to make up the appraisal gap.
So if the buyer is now paying $250 per whatever thousand, then there's a possibility you would have to put a limit if the buyer only had so much cash,
Correct.
you know, because you don't know what that gap is. So you'd
Right.
still have to kind of put an appraisal, still somewhat of a appraisal contingency, because depending on how much cash the buyer has to contribute to that extra.
Yeah, and so Ribbon's going to give it a value at that point too. So it's going to be a max. They're calling it a max Ribbon value. So let's say at the house is 300,000, and they will let you do that appraisal gap up to 350 based on their value. Then you would need to do the math of, okay, so if we have a worst case scenario, a $50,000 gap, that's going to be, you know, 250 for each thousand. Can my buyer make up that difference, or you're going to just have to do an offer up to, instead of 350, maybe 330, because that's all the cash that they have.
And Jason, this is Idul. Quick, with George, the same scenario you had before with the 385, and they'll pay up to 380 and the 5,000. You want to make sure that the buyers have that money before we even put an offer in, because we don't want to go into that when they said, well, you have to come up with 5,000. They said, well, I don't have 5,000.
Yeah, I mean, definitely. I definitely wouldn't recommend, you know, waiving contingencies if you're not familiar with the, you know, the funds that the buyer has.
Okay, thank you.
Jason, this is Malvis. I have another question. I just wanted to make sure that I understood correctly. Let's say I have a seller who has his home on the market, and that seller is trying to buy another house. Can Ribbon purchase that house, not the one that the seller is living in, but can Ribbon purchase the home that the seller is trying to buy?
Mm-hmm.
And then can that seller move into that new home that Ribbon just purchased, vacant their current home to have it more available on the market for as long as it takes to sell, and then the sellers can purchase that home back from Ribbon? Is that what you said?
Yes. So Ribbon would buy that home. It would be a 2.75% fee for them to purchase that home. They will negotiate a rental period or a lease back. And then at the end of that lease back, they would have to, you know, get financing and purchase the property from Ribbon. So yes, they could essentially move in to that new home after it's been bought. If it takes, let's say, not do a 90-day lease, and then they can purchase it once their other home is sold.
For 2.75%.
Correct. So if it's a $400,000 house, you know, you're looking at close to $12,000.
Okay. Thank you.
Yeah.
Jason, George Lumen again. The question I would have is, then can you add a gift letter to make up some of those funds? Like they didn't have the 5,000 we talked about on a previous example. Can that be gifted from parents or family?
Yeah, I mean, so if you're going from the finance perspective, then yeah, I mean, you'd still, you know, follow your FHA and Fannie Mae guidelines, but a gift should not be a problem, because you're basically giving them their gift towards cash to close.
Okay, and then the second question I have is back to Malvis's example where the people vacate their house, buy another one. How do you then qualify them for the actual takeout loan?
So yeah, when they go to purchase that house from Ribbon, of the one that Ribbon purchased, ideally what you would want to do is make sure that the other home is sold, or you're gonna have to finance it with both debts until that one they're selling closes. So what I would say is structure it from the perspective that they're going to move out of that home, they're going to lease this current one, and then when that other one closes, you could do a simultaneous close. You could take those funds same day on the day that you close on the one that Ribbon has bought, and just do it that way.
Okay, but when you're qualifying them, you're doing that in advance, right?
That's correct. So I mean, we're pre-approving them at a certain amount, but when you throw in, you know, if we got a scenario where we know that's going to be what's going on, then we're not going to count that debt against them, because we're going to essentially do a simultaneous close, or that's going to be closed before they close on the purchase of the house that Ribbon bought.
Okay, so you're not going to do a debt to income based on both payments. You're only going to do it on the new payment.
That's correct. Unless
Okay.
The only way we would do that is if they actually are going to close on the house that Ribbon bought before they've closed on the sale of their home. Then
Okay.
we'd have to count both.
All right.
There is a sneaky Freddie Mac guideline, though, that if you're moving from one primary to another primary, you can actually get a rent schedule on that primary you're leaving and use 75% of that income to cover that mortgage. So that's another workaround as well.
Okay, thank you.
Wow, that's a lot of stuff to know. So let's assume there's going to be some lack of understanding of some of this stuff and some confusion and stuff like that. So I've put you guys contact information in the chat so people can reach out to you when they have purpose for this, which is probably quite a bit right now. Anybody that has a buyer, or even if you're trying to talk someone into selling or something like that, to run scenarios by Jason and Michelle. So what is the best way, Jason? I know you've kind of touched on this already. What is the best way to get started in this? You're going to direct them to the portal and do all that kind of stuff. What's the best way to get started? Let's say I've got something and I'm like, oh gosh, I really am having a hard time finding these buyers a home. I have to keep competing with these offers and they're not the strongest buyers in the world. So what's their first step?
I would reach out to me via email. I can send you the documentation on it. Have a look at it with your client. If you need me to jump on a call with your clients with you to explain the program, I don't have a problem doing that either. Once they're ready to move forward at that point, then we would get them pre-approved, then get them set up on the portal. You set up on the portal and start shopping.
Awesome. Michelle, do you have anything to add to that?
Well, we're also here for the agents. It's all about relationships, and we have access to do like analysis for cost of waiting, for example, to show your clients, and also how much more goes into, like, if you have to put an offer in that's above asking price. So we show you how the numbers essentially, of what they're doing and how you'll pay it off. Because right now, property is 20%. It's increasing. So we have all these tools and marketing tools available for you guys. So just communicate with us and we can provide that for you guys and your clients as well.
Yeah, guys, they have put a lot of information on us this morning, so I don't expect you guys to remember it all or to be able to separate one program for another. I know I can't right now. So when you guys get the opportunity to use them and help your client, please reach out to them and have them go through whatever scenario fits your client the best. Do you guys have any other questions for Jason or Michelle? Anyone? All right. Well, if you guys, Jason, Michelle, you guys have anything else to add? Nope. Awesome. All right. Well, I want to thank you both so much for coming on. You guys have been very helpful. Hopefully, our agents will be able to turn this information into some deals, and we'll be contacting you about moving forward. I know you guys have been working with some of our agents and with great success. Michelle, I know you have created some relationships, and Jason, you as well. So I appreciate you guys coming in, and I appreciate the hard work you guys do for us. And I look forward to talking to you guys again soon. And I remember you guys back when you would put your own information in the chat, but now you're kind of big time and I do it for you. So I want to congratulate you on your promotion. So you guys take care. Thank you very much for coming in.
Thank you.
We'll talk to you soon. Bye, guys. All right, FRI agents. Any other house business you guys want to talk about? George, our government liaison, is back. Our government affairs update guy is back in town. So, George, do you have anything for us on government updates? You're on mute, George.
There
There
you
you
go.
go.
The two programs that came out of the federal programs, the state has been slow in doing that. The one is rental assistance. There's about $1 billion out there for rental assistance. And I think, and I haven't gotten any details on any of this because the state is just rolling them out in pilot programs. The Department of Revenue is handling the foreclosure funds, and that one's got about $650 million in it, give or take. But right now they just have rolled out a portal, or had a consultant rolled out a portal, and all you can do is put your information in. They don't know if you're going to be able to get, if you're approved, you meet the funding. And the funding requirement, the approval requirements are you're 100% of the national average of average salary for the area, or in Orlando, that lets you go up to 150%. But I don't have the details on what those real numbers are. And they had Sentinel ran an article on the foreclosure relief one, and the people are putting their information in a portal and they're saying, you know, thank you for registering, and then there's nothing. So what I understand is they've got about 10% of that 650,000 allotted to a trial program, but people are probably going to fall into foreclosure before the state gets its act together on that one. The rental assistance is up and running, but again, don't have a lot of detail on that. And it may be in pilot program as well, because I had read, and I think Tammy corrected me, that there was like $1 million out there, but I think that's just a pilot program. And the amount that Florida qualifies for under the infrastructure bill is about $1 billion. And that runs for quite some time, but when you figure that you can get that relief for over a couple of years, actually it doesn't end up being that many people. So these numbers seem really big to me at first, but when I did the math on them, they're not going to cover the need out there by a long ways. So those are the two that are going on. You heard that the legislature is actually getting their act together on doing something on insurance, but I don't know what will happen on that. We're watching that at CFRI, and we're watching Orange County's wanting to do something with rent control. They want to put a 5% cap on rent increases year over year. And just having done 8 trees, just to get the palm fronds done, my costs on those went up 250% from what I paid in 2019. So it's, so I don't know where that one's going, but there's a meeting in June on that one. So that's kind of from the government perspective. Everybody's trying to solve the problem, but they're kind of trying to lay it on the landlord's back, or having a government process that doesn't seem to want to work.
And that's really weird, George, because usually government solves everybody's problems. So what I do, that is good news though, that there's a special session in May. You guys are having problems with roofs. Everybody wants a new roof. Every insurance company wants a new roof if it's more than 12 years old. And I've heard that's going down to 10 years and all that stuff. But there's a special session. They're calling a special session in May to discuss home insurance. So hopefully something good will come out of that, something helpful for us. George, what do you know about this rheology suit? Are you familiar with any of that?
No, I'm sorry. Run that by me.
Okay. Well, I will send you the information, and if you could find out whatever you can find out about it, thank you. I appreciate you taking on this new job. This has been great for us.
I'm about to resign from that.
I've got plenty of assignments for you. Daryl, anything exciting for you, Mr. Shy, asking your questions in chat?
Nope, everything's going cool. Actually, I just sent out my new postcards, my new listing. I do that through, what is that? Prospect Plus. They're really simple to work with. Yeah, just did that yesterday. So my just listed postcards will be going out as soon as which I've already got 4 offers, of course. As soon as I get the place sold, I'll be sending out just sold postcards to the same people right afterwards.
And they'll pick them up in their same trip to the mailbox, which is awesome. That really is pretty cool. But be sure that you guys, when you have these listings, be sure to send this stuff out. Prospect Plus, you said?
Correct.
Prospect Plus. Look into that, guys. When you get a listing, I don't care if it's your first listing you've had in forever and you're just lucky to have a listing or whatever, send these things out. Look like the pro. Angie, as you guys heard last week, those of you who are here, is doing a mentor program. She's heading that up for herself and for us. And I know she got a good one this week that she's excited about since then. So anybody excited about being a mentor or having a mentor, please let me know and I'll direct you to Angie. She'll talk to you about it as well. All right. Anything to say about that, Angie?
No, just that, mentors and mentees, anyone looking to get mentored, looking for some additional training and accountability partners and just help setting up systems for your business. And any prospective mentors, I got another mentor too. So anybody who wants to help out, has a little bit of free time to help out newer or building agents, just reach out to me or reach out to Ryan and we'll get you partnered up.
All right, guys, it is an awesome, it's mutually beneficial for both parties. So any other questions or comments before we call this thing a day? Yes, Tammy.
Yeah. So the MLS exclusion form, do I upload that in paperless pipeline to get to Carissa or email
Send it to Kayla. Just send it to Kayla.
Directly email it to her.
Email it to Kayla. Get sales@flarealtyinvestments.com. Same as my domain, except sales instead of Ryan.
Okay.
Angie, is there any MRP in Tampa that work military relocation professionals?
Are you asking if we have any MRP
Yeah,
agents?
Are you one or do you know of any?
I'm not one, but I do know several in different areas.
Okay, well, most of my leads are coming through for McDill and Central Command.
Okay. It's an agent who used to be with FRI and she moved over here to Tampa and she, do you know what I'm talking about, Ryan? She started either, I don't know, her own brokerage or she started her own team. I'll get you her number, George. I'll email it to you.
All right, well, I'd prefer an FRI agent, but if we don't have one.
Yeah, I don't know. You can maybe ask if anybody is, because I know she's not, but she is a military relocation specialist and I'm not. So I always give my referrals out to someone who is.
Okay. When you get through mentoring, get your MRP.
There you go.
There's one day course. Or 3-day course, I remember.
Yeah, it's a good one to have. So any other questions or comments, guys? Nothing. Awesome.
Sure,
If you guys
let me add something on the programs that were just introduced, the Landis and the Ribbon. I have been into the Ribbon portal, signed myself in, and with all the information given, yeah, it is quite confusing and it has to be interwoven with the offers that we make. But the Ribbon website actually has pretty good short video tutorials and PowerPoints to explain all those different programs and things to go. So don't be shy about going in and getting, there's a lot of good information in there in short to get us up on that program.
And guys, thank you, Mike. That's a great point. And I want to expand on that. And the reason I told you guys to contact Jason and contact Michelle and make them hold your hand through it. Guys, they make about half of what, just so you guys know, LOs make about half of what you guys make on a deal. Okay. They are very incentivized to get your deal done. They want to work with you. They want to help you. You wouldn't expect them to know everything about what you do. You're not expected to know everything about what they do. Don't be shy. Don't be embarrassed. Get the deal done. Use whatever resource you have. Don't feel bad about them holding your hand, right? Get the deal done. You guys don't feel bad about me holding your hand. Don't feel bad about them holding your hand. Get the deal done, right? Go talk to them about, that's what they do. It's their job to understand these programs, right? Not yours. It's their job. It's your job to try to learn and help so you can help your clients without having to call them at every turn. But it's their job when you actually have one. And guys, this is very important to take advantage of these programs. Take advantage of everything that you have out there because it is so competitive. Every little edge you can get is a deal that you're going to get that somebody else isn't going to get because they're trying to go in with a 20% conventional loan and you're going in with one without financing contingency. Which one is your seller going to take? With or without financing contingency, right? Which one would you ask them to take? So, yeah, I mean, do you guys want to be back here in the same place in 28 days, or do you want to be closing in 28 days, right? So, or 35 days or whatever it is. But that's it. The cost of the mentor program, I'll let you guys talk directly to Angie. Angie, will you put your information in the thing again?
Yeah.
Angie's information.
I will, but the chat goes away after we finish this conversation. So if you don't write it down right away, just email Ryan and forward it to you. But.
Okay. Yeah, you can email me then if you are not quick enough to write down Angie's thing before I kick you guys all out of here. And any other questions or comments? Guys, lean on these people. Lean on Jason or your loan officer, whomever it is. You're welcome to use whomever you like, guys. We have people on here. You don't have to use them, but you're welcome to use whomever you like. But the people who come on here are approved by me to come in and talk to you guys. And I know they're good people. I've known Jason for years and years and years outside of real estate. Any other questions or comments?
Ryan,
Sunaina.
Yes, I put it in the chat, but I guess you never saw that. Always contract has to go on as is residential. Don't smile because I don't do too much residential and I've landed up doing it.
I'm not smiling at your question. I'm smiling at you that I didn't see it in the chat. So do all contracts have to go on as is? No, they don't have to. I recommend it, especially in this market, that they do. If you want it to be accepted, you do. As is, we could go back and forth with a long conversation about as is versus a standard contract. I prefer as is for both sides, but that's just me. I'm a very cut and dried person. I prefer as is in any market. Some people don't. I'm not going to get too much into the details of this. What is your specific concern about whether or not to
my concern was I landed up doing for my investors 2 vacation homes, and one person I sent a contract and they insisted I do it on the other, and that was bothering me. Why are they insisting on doing on the other? I said, I've sent you on as is, and why aren't you accepting it? And they are like, no, we want it on the other one. So vacation homes, there's a lot of games going on that. So I was just concerned since I'm not so savvy about that. So I said, let me run it by you.
Sunaina, let me tell you, 82% of Americans who are non-real estate professionals believe as is contracts mean you have to buy it however it is right this second, and that you don't get an inspection period and all that stuff. You guys have all heard that before, right? I'm not buying it as is. I want to get it inspected. That's not how we know that's not how that works. But and I made up 82%. It's a lot of people. So they don't know. You hear that a lot. People say as is. I'm not buying it as is. The as is contract simply gives them a chance to back out for any reason within the inspection period. But more importantly, for the seller, it doesn't bind them to fix a certain amount of stuff. The as is. It gives both sides more flexibility. If I were your owner of that property, especially one that they do not live in, I definitely would prefer the as is, and your buyer can submit whatever they want to submit, but it's up to your seller whether or not to accept it. Yes, sellers can demand an as is contract. Well, they can demand that in their listing agreement with you, which you will put in the realtor remarks. You guys have seen this. Seller will only consider as is offers. You're welcome to submit whatever you like, but most sellers will only consider that. And the reason is they're not bound to. So you guys know part of the problem with the standard contract is if I go get an inspection and there are things wrong in the inspection, I can make the seller fix up to a certain amount of general repairs. Not cosmetic repairs, but general repairs. And you get into that battle of cosmetic versus general. The seller then, if they disagree with this, would have to hire their own inspector and have them come back with their own inspection. And if I disagree with that, if I'm the buyer, then together we have to go in and get another inspection with a third inspector who's not related to either one of us, that's picked randomly. So it gets really, really messy. It ties both parties up. It forces the seller to make some repairs. It forces the buyer to buy, even if something else, even if they don't like what's wrong in the inspection, if the seller fixes it, it forces them to buy it. So it gets really, it's really sticky and complicated. And you've seen almost none of them, I'm wagering, in this market because sellers do not want them, and it's a seller's market. So, I don't even like it for my buyer. I like my buyer to be able to back out for any reason. So that's just, sorry I went on there, Sunaina. Sunaina, I would say that your seller, you have the listing there. I would say that my seller, I would recommend that they only take an as-is contract.
Okay. Okay. Thank you.
But the
Thank
buyer, if you have the buyer also, it sounds like you have the buyer also that wants you to write the contract. And if that's the case,
No. I was on the buyer side and I'm looking at vacation homes, which is a pure circus right now, but they want it. So I have to, because I'm going to get paid that way. But eliminating the rest of the circus, the guy was insisting, why did you send it on as is? And I'm like, why not? That's the way everybody's sending the contract. And he's like, no, send me on the other one. And I'm like,
Okay.
What is the reason? No, it's just that they want it. So I was like, why is he eating my head for this?
They don't understand, Sunita. They don't want to buy something. Just think, if you didn't understand that, you don't want to buy something that's just as it is right now. They're never going to fix anything. If the roof is leaking, they're not going to fix it, right? And that's what a lot of people think an as-is contract is.
Yeah, that's what I think it was. And he kept on saying, no, send me on the other one. That's when I'll take it to the sellers. And I was like, okay, I'll get it changed because they really want that house. Obviously, we didn't get it because of the bidding wars. But,
right. A lot of our job, Sunita, is educating clients. A lot of what we do is educating clients. So any other questions or comments?
Thank you.
No problem. Any other questions or comments? All right, guys. Thank you, everybody, for coming out. We will see you next week. If you guys have anything in the meantime, have anything you want to see on like this one was by popular demand of you guys. Anything you guys want to see, ways you can be more competitive, ways you can do this, ways you can do that, let me know. And we'll get going on that. All right. So email me, whatever you want to do. Thank you all. Have a great day. Take care, guys.